In this video, we'll be technically analyzing US30, which we also refer to as Dow Jones. And as you guys can see, we're on the weekly chart. So what we'll do in regards to the technical analysis of US30 is identify the market structure, market patterns, key support and resistance levels, important candlestick patterns, as well as levels at which we should be looking for those potential buying and selling opportunities, right? And before we get into the actual technical analysis, I just thought I should remind you guys that earnings season is well underway, and this coming week some of the world's biggest companies by revenue and market share will be releasing some of their results. So if you thought last week was a tricky week, this week will even be worse, in my very humble opinion. To add to that, we also have some news releases that will also affect the direction and progress or lack thereof of US30. And so, without wasting any further time, guys, let's get straight into the actual technical analysis. And as I said, we are on the weekly chart. And in regards to the weekly chart, what we see at this point in time is that the market had given us a very nice inverted head and shoulders pattern, with this side being the left shoulder, this being the head, and this side being the right hand shoulder. And it had a neckline at that level, more or less. And you guys, as I always say, know that whenever we have these patterns such as the inverted head and shoulders pattern, we want to see price breaking to the upside of that neckline and then coming back to the neckline to give it a test. And at that point is where we normally look for those potential buying opportunities, especially if the neckline aligns with any key numbers that we have in regards to the Fibonacci retracement tool. So what we would like to see happen in the future is price coming back to the neckline to give it a test, and at that point where the neckline is where we would look for those potential buying opportunities, right? And in fact, if you were to utilize the Fibonacci retracement tool, you would see that the neckline of that inverted head and shoulders pattern actually aligns with the 38.2% Fibonacci retracement level, actually, right? Let's do that, right? And this is actually based on price actually moving further up to this level first and then retracing back to the neckline. You would see that the neckline actually aligns with the 38.2% Fibonacci retracement tool. So what I'm saying, in other words, let me just actually delete this tool, is that prior to price actually coming back to this level, ideally you want to see it continue up all the way to this level and then only move further down to around this level. And at this level is where I believe we should be looking for those potential buying opportunities. Why do I say this level over here? That is because that level is actually a very strong level of resistance at this point in time. If I can just zoom out, as we had multiple rejections at that level in the past, right? And in the future we may see a situation where price heads up to the very same level to test it, and then we might see a retracement of sorts and all the way to this level over here. Another thing that I'm saying is that where we have that very strong level of resistance is where we should potentially be looking for selling opportunities. And if we do indeed find any good selling opportunities at this point, I believe that our first take profit should be around this level, which is where we have, as I said, the neckline of this huge inverted head and shoulders pattern, as you guys can see. So what else do we see on the chart that we should be paying attention to? At this point I don't see much. I'm just going to head down to the weekly chart and let's have a look what's happening in regards, or rather the daily chart, excuse me, and let's see what's happening in regards to the daily chart. And just to recap, guys, remember on the weekly chart we spoke about how we have this huge inverted head and shoulders pattern which has a neckline at that point, and we said that we want to see price continue to move further up to where we have that very strong level of resistance, and at that level is where we could look for those potential selling opportunities. And if we do find any, our first take profit should be around this level, and at that level is where we should potentially be looking for those buying opportunities, potential buying opportunities. But now that we're on the daily chart, let's see what's happening. Let's just zoom in. So guys, as much as on the weekly chart we have that huge inverted head and shoulders pattern, I hope you guys can see that on the daily chart we have this W structure over here which also has a neckline. And I also want you guys to see that the neckline of this W structure is also in line with the neckline of that huge inverted head and shoulders pattern, right? So this means that your price from where it is come back to this level. This is a very strong level to be looking for those potential buying opportunities, because number one, as I said, guys, we have that huge inverted head and shoulders pattern, right, which has a neckline at that point. Number two, we also have a W structure over here, which similarly has a neckline at that level. So this level will be a very strong level should price come back to it, and at this level again is where I believe we should be looking for those potential buying opportunities. And in fact, it would actually make sense for the institutional traders to come in large numbers should price come back to this level. And that is because, as I said, guys, it's a very strong level of support, and it makes sense to be looking for those potential opportunities at that point, right? And let's also utilize the Fibonacci retracement tool just to see if that neckline of this W structure actually aligns with any key numbers that we have in regards to the tool, right? So I'm just going to put it here. Remember, guys, I said that ideally we want to see price continue to move further up, and at that level is where we want to see it move further down, right? So we can see, let's have a look. We can see that actually, right, the W structure, which is over here of this, rather the neckline of this W structure, aligns, if price will continue to move further up to this level and move further down, right, aligns with the 50% Fibonacci retracement tool, right? So as I said, this number or this level over here is a very, very good level to be looking for those potential buying opportunities, right? Anyway, what else do we see in regards to the daily chart of US30? At this point, I don't see much. Let's head down to the H4 chart and see what's happening down there. And here we are on the H4 chart. And just to recap again, guys, remember on the weekly chart we spoke about how we have that huge inverted head and shoulders pattern, and then on the daily chart we spoke about how we have this huge W structure which has a neckline at that point, and we said that the necklines of both the W structure as well as the inverted head and shoulders pattern are at the same level, more or less, right? And we also said that the neckline of this inverted head and shoulders pattern aligns with the 38.2% Fibonacci retracement level, which is at this level, and also that the neckline of this W structure aligns with the 50% Fibonacci retracement level, which is also at this level, and that at this level is where we should be looking for those potential buying opportunities, right? Remember that. Anyway, here we are on the H4 chart, and in regards to the H4 chart, we can see that we are indeed in an upward trending market, which tells me that we should be looking for those buying opportunities. We should not be selling at this point in time. Nonetheless, let's zoom in and see what's happening at this point. Just going to zoom in a bit, and in regards to the H4 chart, we have this level over here, right? And at that level we can see that the market has given us a very nice M structure or double top, which has a neckline at that point. However, the neckline is yet to be broken, and you guys know that whenever we have these patterns such as the M structure, we want to see price break into the bottom side of that neckline, heading back to the neckline to give it a test, and at that neckline is generally where we look for those potential selling opportunities, right? Having said that, I would not really take this M structure seriously. Why do I say so? That is because this M structure is very random. It happened in the middle of the park and not necessarily at a very strong level of resistance, right? So ideally I would love to see this structure, this M structure, happening at around this level over here, and that's how I would take it seriously. But this one over here I would not take seriously, and in fact it could be a trap. Why do I say so? That is because, guys, remember, whenever we have these M structures, what also happens normally is that a lot of traders and investors sell on the second leg of that structure, and they just place their stop losses just above. So this could be a trap in that the market may actually close or move further down to just below that neckline, and then move further up to grab all of those stop losses, and then continue to move further up to that level where we have that very strong level of resistance, and then at that level we may potentially see the market move further down, or the market may give us another M structure at that point and then move further down to around this level, which is where we have the neckline of that W structure as well as of that huge inverted head and shoulders pattern. And I said to you guys that at this point is where we should be looking for those potential buying opportunities, right? So I hope what I said is clear, right? That yes, we may see price actually from this point move further down directly. However, because the M structure happened right in the middle of the park, I would not take this M structure seriously, as it is also possible that we may see the market continue to move further up and then at that level is where it may give us another M structure and then move further down to around this level. But in as far as buying or selling opportunities at this point, I don't see any actual buying or selling opportunities. Nonetheless, my bias is for the market to move further up to that level, and at that level is where I believe we should look for more M structures or head and shoulders patterns, and then look for selling opportunities. And if we do indeed find any, I would love to see the market move further down to around this level, and at this level is where I would look for those potential buying opportunities, right? So that is it as far as my analysis goes. Just remember to like the content if you do indeed like it, and subscribe to the channel.